Hello everyone, I'm Hutan, this is Wook. We're from Big City Realty. In today's video, we're going to talk about the real estate market stats in April. This month's been a pretty crazy month in terms of the numbers, and we're seeing the beginning of the shift in the market. That's why specifically two of us, we wanted to talk about this month's stats and see what we can expect next. Go ahead. Talk about the sales stats.
All right. So, I mean, yeah, like Hutan said, April's been kind of a chaotic month. Lots of headlines, lots of, news going around, talking about prices. Let's kind of dive into it and see what we had going on. Stats came out yesterday, and the numbers, I mean, from a pricing perspective, they don't look very good. What happened? The number of sales in the month of April has come down by 41% compared to last year. So that means like the number of actual activity, the number of sales has come down drastically. That's crazy because, I mean, we're typically going into a spring market. You see more and more homes being listed. You see more and more buyers coming out. Nicer weather, it's a better time to buy. But what do? January and February, we saw record numbers. So we basically pulled forward a lot of that demand. A lot of the people that wanted to buy, they did buy in January, February. And now we're seeing this slowing down. And, with boots on the ground, what we're definitely noticing is that all has to do with all this fear and anxiety and uncertainty around the Bank of Canada raising interest rates and basically promising to continue raising interest rates for the rest of the year. So you basically got a lot of buyers, a lot of people that were going to make a move saying, you know what, I'm going to sit back, I'm going to wait and see how far this thing goes. So, if we take a look at this table, the year over year summary, like I said, 2021 April, 13,600 sales happened. 2022 April, 8,000 sales happened. That's that 41% drop. And then if you compare that to the number of active listings from 11,668 down to 13,098, that's an increase of 12%. So you've got less activity, less sales happening. You've got more listings coming onto the market. And that is naturally going to push pricing down, right? Meaning that buyers have more opportunity, they have more choice, and so now they don't have to go into that crazy bidding war, and get kind of emotional about it and go and spend an extra $50K compared to the previous comparable.
In terms of prices, what we're seeing right now, year over year prices, we're at like 17, 18, and 14% higher than last year's prices, right? Exactly. Because we saw a massive appreciation of prices in the past 6 to 12 months. So prices were just coming up, and you can see this difference between the last year's prices, right? And now we're seeing that in March it peaked, like in February it peaked, and then now it's slowly coming down, right? And why is it coming down? As Wook mentioned, because usually like the way we identify the condition of the market is month of inventory, which is the number of active listings over active listings over sales for the past month. So when we were in the seller's market, there weren't that many active listings and there was a lot of sales. But now what's happening is the number of listings are going up by 12%. The number of sales are going down by 41%. So that month of inventory number is going up. So from the extremely seller's market, we're entering into a more balanced, and in some areas, even in a buyer's market, which puts a negative pressure on the prices. And you can see these charts with the prices still year over year. We're still higher, right? So now let's talk about the specifics, right? Which area did the worst and which area did the best in terms of product type and the area and in terms of the appreciation. Go ahead.
So I think this will be interesting to kind of highlight some of the differences. So if we start with the detached homes, if we're looking at the monthly change, which is the light yellow, we see that actually in Toronto, in the city proper, we've seen a 1.5% increase in values or in prices.
Average selling prices.
Average selling price has increased. Compared to, if you look at the bottom, Stouffville, lost 18% for detached homes. Now, take that into context. People, that must have been like an outlier situation. It was a one-off. So those things are going to come out a little bit skewed, obviously, to one side. But it's interesting to note that, this, that reversion back to the mean. What was happening during COVID? People were leaving the city, going out to Stouffville, going out to these areas that, typically didn't see that much demand. And now, possibly, we're seeing a little bit of a comeback.
Yeah,
right?
The more frothier the market was back in the 6 to 12 months.
Exactly.
The most appreciation that we saw, now they're seeing the most impacted because it's just like what Vuk was mentioning, right? But like, for example, Toronto didn't see crazy amount of appreciation year over year for the past 2 years. So now, and we were seeing it's gonna be the least impacted, right? And it's because it's central and it's core, right?
Yeah.
So what about townhomes? Like, what are you seeing in townhomes?
Yeah, so I think townhomes got the most love during COVID, and now they're seeing probably a little bit more of the
most hate.
discriminatory, selling. So Toronto lost 8.7%. Stouffville again 9.9%. So not a lot of love happening in Stouffville, and I think townhomes probably did the worst month over month. Would you say?
Well, because they did the best. Like, if you think about it year over year, you're looking at these numbers. Pickering, for example, had 28%.
I know, it's crazy.
Vaughan had 27%, right? Because it's that perfect replacement of house for the condo people that wanted to move out of the condo and they wanted more space. So townhomes saw a lot of demand the past two years, and now you're seeing that all of a sudden all that appreciation is getting evaporated, right? I mean, still we're still high year over year, right?
Exactly, 28%. So if you take this into context, we could lose another 3-4% every month for the rest of the year, and then basically be flat from year to year.
Exactly, and it's possible, right?
It's possible.
It's possible. What about condo market? What do you see in the condo market?
Condos saw, Pickering saw negative 12%. And Markham saw a 9.8% drop in values. Toronto, we saw 1.3%. You've got Mississauga at 3.9%. So looks to be that the worst performers month over month were Pickering, Markham, a little bit outside of the city. Maybe people are saying, this is probably too small for me to live this far from the city. I'd rather maybe upsize and go a little bit further away, especially if maybe now there's opportunities further away. Or they're trading in their condo in Markham and saying, let's go back to the city. It's more fun.
Well, I mean, a lot of jobs that we're hearing that the offices are asking people to come back.
That's it.
Right? So that's one motivation that people that are saying, okay, let's just move back to the city. I don't want to commute 2 hours a day, right? And we always saw that coming, right?
Exactly.
And now it's just happening. It's just what's funny right now is everything's happening at once, right?
Exactly.
Offices are reopening, asking people to come. There's been a buyer fatigue since March because we saw a massive appreciation. On top of that, we are seeing central banks are being super hawkish and they're gonna increase rates 10 more times. Who knows how many times? So now everything's happening at once.
Stock market's coming in, people losing some money,
down, right?
Crypto's down. I mean, it's just not a very, this is where the smart investors start to load up.
Yeah.
Right? This is where the smart money kind of starts to come in and, they start to nibble a little bit here, a little bit there, as opposed to looking at this as a sign of Armageddon to come. I mean, who knows? Maybe things get worse. Maybe things get better from here. I mean, what do you think happens next?
Well, I mean, that's a good question. A lot of people ask us, what happens next? Or should I buy? Should I sell?
Yeah.
Honestly, nobody's got the crystal ball, right?
Yeah.
Nobody knows what's going to happen. You just make decision based on the information that you have at the moment. What we're thinking is that in June, Bank of Canada they're saying they're gonna increase the rate by another 50 basis points. So that's 0.5% essentially, right?
Yeah.
And the Fed doing the same thing, so they have to follow obviously the Fed. But now we know that we've already had 1 quarter of negative GDP in the US, so we're halfway through recession. So now we don't know. Are they gonna increase rates enough to break the economy and enter us into a recession? Then if that's the case, then nobody's gonna be protected, right? Housing prices obviously is gonna go down, right?
Except for the people shorting the market.
Except for the people in stock market, right? But now,
or the ones that don't own real estate. If you don't own real estate, you're essentially short the market.
Or
right?
you don't, there's if you don't, you have two options. If you don't own by choice or you don't own with no choice.
Yeah,
right? Like,
but you know, and I think for those people, this is a good sign, or like this is what you want to see. You want to see that price come back into your affordability range, but also keep in mind, with a higher interest rate, your monthly expenses are now going to increase.
Yeah.
So, you know, I think the important thing is, you know, why are you getting into whatever it is, whether it's an investment, whether it's you're buying it for a principal residence, you know, why are you getting into it? Do the math, see how, you know, see what your finances look like, and then always consider your debt to asset value ratio. So for example, $1 million home, you go in at 20%, you've got 80% debt. With 80% debt, you're a little bit more, I guess, like fragile, or you're a little bit more open to things becoming a little bit harder for you as rates go up. But if you've owned real estate for the last 6, 7, 10 years and you're at a 40% debt level to your asset value, then it doesn't hurt you much.
Exactly. And again, you know what? So what's happening next? We could be in this downturn until Bank of Canada starts changing their tone, right?
Yep.
So who knows when's that going to be? Is it going to be end of this year, like halfway through this year, next year? Who knows? So what we're seeing, we're just going to have to, there's a lot of things happening in the world. It's all happening at once. What we can do at this moment to provide the right and unbiased information to you as a consumer and as someone that we advise, then you can just kind of make a decision. And if you're not sure about different things, you can always reach out to both of us. You know, like if you reach to any of us, it's like essentially you hire both of us, right? And then you can, more brain, you can make a better and more informed decision, right?
Exactly. It always helps to talk things through. I mean,
exactly.
That's why we do so well together, because I have an opinion, you have an opinion, we talk them through, and then we kind of, self-regulate one another. And I think that's the important thing for everybody to keep in mind is you're not alone. You're not alone in this. It always helps to speak with an expert, get their opinion, and then go back and recalculate and reassess.
Yeah. So we're gonna keep coming up with these videos on a monthly basis. We're gonna give you market stats, and we're also gonna talk about the specific strategies, how to navigate this. Because you know what, at the end of the day, no matter what happens, you still have to need a place to live, either buy, rent, invest, sell, whatever, right? So, but the strategies changes in these environments, right?
Exactly.
So now, and we can talk about those. Anyway, I hope you enjoyed this video. We look forward to do more videos for you, and have a good day.
Yeah, we'll see you guys later.
See you.